Here talking and it wasn't working. Charles, good. Ron R, awesome. Thank you guys so much. Ron A, Larry, fantastic. All right, perfect. So, absolutely great, guys. We got a ton of things that we're going to get into today. We're going to talk, trades, trading opportunities. We'll do some analysis here today. We'll talk some news. We'll talk everything that you guys want to cover as well. But before I do, got to let you know, I'm not a commodity trading advisor. I'm simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you have to be aware of any and all risk, understand that risk, be willing to accept that risk and take on that risk. And anything covered in today's presentation, just know if you decide to take any of the trades that I cover here tonight, know that you are taking those of and on your own volition there. Now, without any further delay, let me quickly introduce myself. For those of you guys in here that are newer to these sessions, this is our Sunday session. Okay. I call it the Sunday session, weekly market prep session, whatever. It's gone through some iterative naming process because when I first named it, and be honest with me, when I like alliterations. So when I named it Sunday service sessions, people thought it was like a church thing, not a trading thing. So I've evolved the name a little bit to what we have now. So I've been in trading education for 15 plus years. Founder of a managed fund as well. We do individually managed accounts where myself we trade for you guys. There are larger minimums, larger accounts, things like that we work with. And then in order to help people really manage their wealth, protect their wealth, and grow their wealth in a risk-free way. Yes, I do mean you can lose nothing. That's what I mean by risk-free. I have a retirement and estate planning company, and I'll tell you, I have my own parents in it. I know, and Andrew and Andy T there. We have to get back together again. We missed each other a few times, but we're gonna get this knocked out for you. And that's what I do is I look for I have studied wealth, and that's what my MBA is. It's in finance and global portfolio management, and working on my doctorate in finance and economics. Ivan, yes, a while ago, almost 2 years at this point now. It was just things not happening the way things not working the way I like them to work. So, you know, left and decided to take talents elsewhere and start the companies that I knew I was already meant to start. You know what I mean? Edward, good to see you. Edward, where in the UK are you? Or no, sorry, it was Jerry who said he was in the UK. Jerry's in the UK. Jerry, where in the UK are you? Um, let's see. Let's see. Awesome. Well, guys, and here's the thing. Later in this presentation, I always give you guys and provide you guys a link to book time with myself or one of my teammates as well, like Brent Birch, Carrie Arnold. There's so many individuals that I work with all the time. And you'll be able to work with us. Brisbane. Oh, the other pond. Peter, good to see you as well. Absolutely. Thank you. Appreciate that, Ivan. So let's get into it here today, guys. Couple of quick housekeeping items. First is the Discord channel. We have been, it's finally starting to come alive. For those of you that aren't in it, this is our Discord channel here. I'm just going to take up the middle of the screen. Stu has been absolutely killing it with some of his trades that he's been in there talking about. A lot of people asking questions here and there, questions about various different tools and things and booking time and all of that. So this is getting starting to grow. Now, this will only work for 7 days. As you can see, it says your invite link expires in 7 days. So it only works for 7 days. So you might as well go ahead and click it now and sign up. If you don't have Discord, sign up later. But this is this Discord. I try to bring you guys good information. I share, trading opportunities. I share stuff in the market. All depends on what my schedule is like that day for what I can and can't share. But soon enough, there'll be a lot more content coming to you a lot more regularly. A newsletter, a daily trading newsletter, as well as working on doing a daily market session, or I should say 3 days a week, doing a trading room, where we go through, use the tools, trade, find trades, things like that. And it'll be kind of streamed for an hour to hour and a half or so, working on that, as well as some educational components that I think will help everybody out there. So excited to be working on that. And then the other is special sessions. I can tell you guys, I don't anticipate many shakeups to the schedule. I do plan to be in New York City sometimes towards the end of this month, and then next month there may be one session that I may have to cancel here or there, but it's ultimately everything should go on very smoothly. But there is a special session tomorrow night. So let me get logged in here. And webinars, upcoming, click that, invitations, and I'm going to send you guys your link. Go ahead, register for this. You can click that link right there and register for the webinar coming up tomorrow. We're going to be talking about risk-free growth, how the market works, how the markets move, et cetera, et cetera, et cetera. We'll be talking about that live in front of you all. So excited for that. So join that if you can as well. And now, as we always do, a brief check-in on the world. All right. So let's start with a little bit of news here. First things first, let's talk last week's fundamental announcements, which last week was a slower week for regular fundamental announcements. We'll see what, this week looks like. So we see that labor efficiency is up. We see unit labor costs was slightly up, but a huge revision, right? So that means that in July, what they said was 5.7%. It actually came out to 6.6%, and then it's still increasing now. Now, this is the thing, I have a lot of rooms and things that I've been around and people I'm around. They're like, these tariffs don't mean anything. We're not seeing anything from tariffs. Nothing matters about these tariffs. These tariffs have already the market's already discounted that. Nobody's worried about that. Nobody's worried about that. Guys, we haven't really seen it yet because more companies have imported things earlier on before the tariffs hit than the actual tariffs have impacted, right? We're not even seeing this is just the very beginning of it. So you have to give things time to mature. Now, what do I mean by that? I'm actually going to share something with you guys. Let me see. I think this one's it. So, as you guys know, some of you know, I'm in that dissertation phase, the all but important dissertation phase. And why isn't this opening? Okay. And so I've been doing a lot of research on various things. And while I was at it, I said, you know what? I might as well just do a little bit more. And I jumped in and really took a deep dive into several different things, right? So what I wanted to look at was what happened when the first Tariff Act was passed in 1922 onward to when the second Tariff Act was enacted in 27 and then subsequently or passed in 27 and subsequently became law in 29, but they enacted all of those things and already had all of those things happening. So what was it that happened in the 1920s and 1930s over these 9 areas? How is it looking today as far as comparison? Yellow is, hey, there's a moderate comparison. Some looks good, some looks bad. Green is there's no comparison at all. This was one way, that was another way, right? So where we are today is totally different than where we are in the late 1920s, early 1930s to go into that kind of recession depression era, right? And then my next thing is I'm going to take this and I'm going to compare it against every major recession that we've ever had and see if there were these same flags, how many were, consequently very, very similar. That's the next phase of this, okay? Um, so I'm going to go through a few of these, right? So the first one, stock market speculation. Right now, there's still high valuations in tech, crypto, and SPACs ongoing. And, back then, speculative patterns continue, though markets are more regulated and diversified. So there was a lot of stock market speculation in the 20s and 30s. Obviously, the market was at all-time highs in 1929 before a 70% crash, right? And people lost everything in that time. Buying on margin. Retail margin trading boomed in 2021 but control are stronger now. Here's where I think something is interesting that can change. And I don't know if I'm breaking news to some of you, but breaking news to some of you, there has been whispers, rumblings, and information leakage out on the World Wide Web of things talking about the potential for, I'm being very careful with my words here. That's why I'm pausing a little bit, just so you know. Talking about and the potential of the ending of the pattern day trading rule, which would allow individuals who have less than $25,000 to trade a ton, right? Be able to take daily option trades, zero DTE options trades in and out in a day and not have to worry about it. Now, I'm fine with that. I think that's perfectly fine. In my utopian mind, it's that everybody would have common sense to have proper equity management. But that's my utopian mind. I don't think about the individual that just started trading and they risk it all on one trade and they go kaboom with their account, right? And I don't think about that. Common sense is not so common. Amen. Right. So I think it's a good thing. I do. I just think for you all in here, just make sure if that is the case and it does happen and it's really good, and just be very careful, right? Don't overextend yourself just because you got this new toy, right? Just because the old saying from Fast and the Furious, you don't jump in the ring with Muhammad Ali because you think you can box, or Mike Tyson, or Floyd Mayweather, whatever boxer was your guy, right? Rocky Marciano, it doesn't matter, okay? Weak banking system, right? We had some banking failures. That was mainly due to the bond markets and poor investments, but a lot better safeguards, FDIC, and is it SIPC? Is that what it is for trading accounts and investment accounts? Todd, I might be mixing up acronyms here, but I believe it's SIPC, and that covers people investment accounts a lot more. Income inequality. Now, I've talked about this. I continue to talk about this. This was what got me interested in the topic for my dissertation, is that we have the highest wealth gap in the entire history of the United States. And when analyzed through AI, and anybody else who can read, there's one thing that has absolutely been the difference maker in wealth growth. And that is the ability to protect wealth with a 0% floor, where it doesn't matter what the market does, you lose nothing. Because there were people in the Great Depression that were invested and lost nothing. And there were people that lost everything. And there were people in the last recession. Hell, there were people back in April that lost a lot that didn't have to. And that's what I do to help people and protect people. Okay. Agricultural depression, that I'm not even going to go into. Monetary policy mistakes, rapid Fed hikes through 22 to 23, concerns about over tightening, right? Slow monetary policy could heighten recession risk. That's a very true thing, but too quick of a reaction could create issue as well. Glut in commercial real estate and tech sector overcapacity, right? We're seeing overproduction, underconsumption. We are an overconsumption, underproduction economy nowadays. So that one I think is even less than moderate because of just how things are. International debt strain, yes, that is a high risk. It was risky back then. It's still risky today, and it's going to be risky a year from now, 10 years from now, 20 years from now, right? Is that there's a lot of debt and it doesn't seem to be slowing down. At a certain point, I think the statistic it was like so alarming. It was at in the next 5 years, we will be spending $1 trillion a month or something. Like at the end of 5 years, we will be spending $1 trillion a month, which is just, I mean, it's unfathomable, you know? Deflationary spiral. We don't have deflation. We have inflation. So we're not in that. However, we could end up in a deflationary spiral because of higher interest rates and tariffs. If people slow down the buying because of high prices, then prices will start to come down. And then if interest rates are held too high for too long, things will really start to come down, and it creates a very, very interesting area. Now, tariffs and trade wars. Okay. Somebody said, hey, you have to make sure the percent of your tariffs are the same. So, ST, here's what happened in 1922. We passed a tariff act that tariffed agricultural goods that were imported, all agricultural imports. Okay. Every one of them got a high tariff. Doesn't matter what the country was, because we wanted to produce our own food and sell our own food, grown in America, made in America, built in America, processed in America, and put on American shelves, bought by Americans. And that's what, when we had I mean, we still have a strong agricultural section, area, but when we had the strongest was, in the tens, 20s, 30s, right? And then things changed. In 1927, they passed a second tariff act. 1927, they put a global tariff. Let me repeat this: a global tariff on 10% of anything imported into the US. Okay. So that's where that, similarly to what we've done already, it's gone up for some. And then on 200,000 goods, we we raised tariffs even higher, as much as 50 and 60% at one point in time. Now, effectively, what that all did was it locked up manufacturing, it locked up trade globally. Now, what could happen is the BRICS goes off and they trade their way, and the dollar goes off and it trades its way, and the G7 go one way and the BRICS go another way. Now, here's a factor that I don't know where it plays in yet, right? I have all the pieces to the puzzle, and I'm building the picture with you guys week in and week out. One of the pieces to the puzzle that I just was digging into, if you combine the major BRICS nations names, right? So Brazil, Russia, India, China, and South Africa. If you take just those names, they represent 38% of global GDP. Right now, the G7, okay, so that's the US, EU, UK. Oh my gosh. Folks, you are seeing it live. Oh, I just had an old timers moment right there. Canada, right? G7 countries. I don't know why. I'm thinking about the next thing I want to say. Canada, France, Germany, Italy, Japan. Oh, Japan. That's what I'm missing. Canada and Japan. Right. So CNADA, Japan, and EU, that's Germany and Russia. Okay, that makes sense. Okay. I was like, wait, it's not EU. I know it's the big trading partners in there. So if we look at the G7, they represent 27% of global GDP. Folks, this is the first time in global history that GDP is being overtaken by a different group. Okay. So this is a very interesting time we're in, like an extremely interesting time. I don't know how this puzzle piece fits in. I don't know what to tell you about that, but I wanted to make sure that, like, hey, this is something that you need to be communicated about. This is something you need to pay attention to. This is something that you want to share and understand. This is something that is going to affect us in the markets. Beautifully, I don't care if markets go up. I don't care if markets go down. We can always make money, right? So now about, that announcements, let's go into this upcoming week. This upcoming week, we have inflationary numbers on Tuesday, right? Inflationary numbers on Tuesday. So core CPI and CPI. Now, the CPI numbers, they are consumer price index, and that's the price of a basket of goods. Okay. Then you have the price of a basket of goods with energy and food, and the price of basket of goods without energy and food. And we're just sitting there looking at these two, this inflationary measure. We will see what occurs. I'll tell you this. I'll tell you this. If if it's a bad report, I'd hate to be the person that has to come and read that from the Bureau of Labor and Statistics, because y'all know what happened to the last person that read something bad out there. um, then we also have PPI numbers, right, which is the producing index. And this will show us, are goods and services going to cost more? Unemployment claims, mortgage delinquencies. This is something that I've been keeping a heavy eye on. Core retail sales as well coming in on Friday, and consumer sentiment as well coming in on Friday. So we have announcements Tuesday, Thursday, Friday, and look for those to be our bigger trading days. Okay. Other quick news things that we want to pay attention to is, one, Fed says, hey, there's a chance we see 3 rate cuts this year, has greater confidence that tariffs will not lead to inflation shock, and believes Fed should focus on softer labor market. Dovish Fed ship underway on the back of concerns about softening labor market. September rate cut already elevated. You see, one of the interesting things that came out of that announcement, okay, and I'm going to go back to the announcement just so everybody understands what I'm talking about. On August the 1st, we saw two really bad things happen to non-farm payroll. The first bad thing was we only created 73,000 jobs out of 106,000. That's not as bad. The big one was July 3rd. We said that there was 147,000 jobs created, but it was actually only 14,000. And that's where things get really bad, right? Is those that missed numbers. Now, we talked about that, this magazine said this and this people said this. And then what really got exposed was the poor ways of the participation rate of the survey that the Fed was sending out to get those numbers. It's funny is, in a class, in one of my doctorate classes, we were talking about this a year or two ago, and I said, I have a serious problem with how this is conducted. It's extremely flawed, because what they don't tell you here, and what you have to go out and dig up, is that the way this is done is they send a survey to 60,000 households. Well, if the people don't answer it, if it gets blocked, if they throw it away as junk mail, if they're going on a vacation, right, and nobody's there to answer it, well, it doesn't get counted. Well, now that skews all of the numbers. And then a month later, they're like, oh, wow, yeah, I did miss that. Here, let me give you my answers. Right? That's the problem, right? That's a problem, I think, is a fundamental flaw of not the numbers, but the way of gathering the numbers. You know what I mean? So with that, I've always had a problem with that, but we still have to trade what the numbers are, right? That's what everybody else trades on. That's what the whales trade on. That's what we should be trading on. So when we take in this non-farm payroll number and bring it in, the Fed would look at this and say, wow, jobs are extremely slow. We need to cut interest rates so that companies can begin borrowing money so that companies can hire workers, right? Because how a company works is really it's a balance of two acronyms, if you will. Okay? One is ROIC, and this is how I would run my business. This is how I would run trading as a business. Okay, there it is. So the first acronym I'm going to just write out is ROIC. Actually, it stands for return on invested capital, right? So they want to build a new iPhone. The new iPhone is going to cost us $10 million in development, and it we expect to make $100 million worth of profit. That's a great return on invested capital, right? We put 100 million over 10 million. That's 1% of or 10% of our invested capital is going to be go away to costs, and the other 90% is pure profit. We love that number, right? They're really seeking a number of 3 to 5%, nothing crazy. So, return on invested capital, right? And then the other acronym they look at is cost of capital. Now, cost of capital, what that is how much is it going to cost us to invest cash versus borrow versus raise through a stock offering, sell bonds? What's the most effective and efficient way to borrow? So let's play a little exercise here, okay? This is where I want your guys' participation. You can borrow from a bank at 1%, and your cash held at the bank makes 3%, or you can borrow at 5% and your cash held makes 1%. Which scenario is better, A or B? I'll give you a hint. It's the first letter of the alphabet. Let's see. Absolutely. It's A every time. Why? Because to a business, it's I'm making 2% on my money in the bank, and I get cheap cash that I can now go and deploy, and I can borrow more than I actually need because I have the reserves and all of that, and I can hire more, I can develop more, I can buy new technologies, I can invest in new technologies, and that's what we want. That's what businesses want to do. And that's what makes businesses profitable. Now, the country is a business. Do I anticipate us seeing, right? Do I anticipate us seeing a 3 rate cuts? Probably not. I think we'll get a rate cut in September, a small one. I think we'll get a rate cut in December, but I don't think we'll get one in October. We are pricing in about 88% say we're going to cut by 25 basis points in September. October, there's a, there's a, it's about a 50-50 chance right here that we won't see a cut. And then December, yes, it looks like there's a higher chance of another cut in December. And then I think they're going to pause again and go through January, February, March, and look at first quarter, look at Q4 earnings, and maybe April and June, and look at Q2 earnings before they take another stab at see what happens, right? Will we see more rate cuts? Absolutely. I think it will be post trade agreements and we will see what happens. Okay. Now, let's see. China wants US to relax export restrictions on bandwidth memory as part of trade deal ahead of possible Trump Xi summit. US Commerce Department now issuing Nvidia to export H20 chips to China following weeks of inaction. Um, Moves come on the heels of Jensen Huang's recent White House visit. China state media says NVIDIA H20 chips, which White House recently reversed export ban on, pose security risk for China. Despite high-profile exemption for Apple semiconductor tariffs, still expected to adversely impact many companies. And then you had Trump and President or Russian President Putin met in Alaska on August the 15th to negotiate end of war in Ukraine. Interesting, it happened in Alaska. I don't know if you guys saw this, but this is like really corner of the world news story. Putin issues statement calling sale of Alaska illegal. So, this happened in January. Um, happened late January, but basically, President Putin signed a statement, a law, said the sale of Alaska to America was extremely illegal and should not happen. And so that's our land and the US should give it back. The US said, ha, come and take it. And who knows? But I thought it was just funny that they met in Alaska and that had happened. I remember like obscure news stories. I apologize about that. Let's keep it going here. What else should we look at? Oh, export price index and import price index. These are two that I will also be looking at. These two here, export price index and import price index. Those are coming this week as well for July. And anything else that we want to talk about? SoundHound AI still doing really well. Let's see. Gilead Applied Sciences. Wendy's did well. TTD did bad. Sweetgreen did bad. Twilio, Goodyear, Under Armour. Let's see. MCHP, Texas Roadhouse. Yeah, your standard ones that were doing bad, we're going to continue to do bad. Right now, about I guess the 7 stocks are doing well and they're holding up the market. So, with that, let's jump into a little bit of the market. And you know what, Jim, I love your comment there. I think what we are having with the Russia-Ukraine situation is the same thing that happened with Crimea, is it has to do with the Silk and Belt Road Initiative. Did everybody here do you guys know what that is? Yes or no? No is an okay answer too. Yes is an okay answer. Does not matter. So FT says yes. Yes or no. We can spend a minute or two and talk about it. Does not matter to me. No, yes or no. And then we're going to get into the market. Okay, I got 3 yeses, 3 nos, of course. 4 nos, 5 nos, 6 nos. Okay, good. So we'll just talk about it really quickly and briefly. So years ago, I think this was pre-COVID, China and Russia got together and they wanted to create what's called the Silk and Belt Road Initiative. And what this Silk and Belt Road Initiative is China has sought to invest in and invest in and own all of as many ports as they can invest in, and Russia and China together are operating these ports. And then on top of that, they have built infrastructure where they can get from China all the way to Portugal, all the way to London on roads, right? That's the other part of this that was happening. And if you look, one of the things, if let me go back here, try to find a map here. Ah, here we go. Here's a good one. Of course, it's small, and I don't want to see whatever advertisement that is. All right. I'm going to screenshot this so I can blow it up a little bit. So and it's going to be a little fuzzy, so, sorry, but if we look, right, the road that they are building, all right, here is one of the ports. It's actually right here. And there is another port right in here that they wanted. And the road from Moscow to here, that's done, built, and ready and working. This other port is not done, built, and ready and working. And notice where this other road they wanted to have built runs through. Interesting how it runs through one country that ends with the U and ends with the crane. Okay. Let's see. That is far-fetched of Belt and Road Initiative since one is already working. No, this is happening. Like this is in place. So you know, this is not like a wish. This isn't a dream. This isn't a hope. This is already like live. This has already happened. It's not like a want or anything. It's not a dream. It ain't a hope. This is done kind of deal. And actually, China even took it even further. They've actually created things between India and China, as well as Pakistan and running into here so they can get through the straits and get around Africa even quicker. Right? This is already. Now, the seaports and all of that for military, here's an interesting thing as well. Ports that China owns. This is just things that I don't know, just go untalked about that crazy people like me research all the time and get to talk about. So here's globally every port that China slash Russia own, operate in a somewhat percentage basis, right? Cuba, North Abaco in the Bahamas, Port of Los Angeles, Seattle Port. They have Port of Houston, Port of Miami, Mexico, Panama Canal, all around South America, all around Australia, obviously in their country, India, China, Russia, Pakistan, Bangladesh, Vietnam, Indonesia, Taiwan, Vietnam, Korea. You have the Mongolia here, all of these in Europe. Notice France, England, UK, Ukraine, Crimea, right? If you look here, what's really interesting, the Straits of Hormuz and the Straits of Gibraltar, right at both ends of the Red Sea they have. So they have all of these ports and they are invested in them at minimum to 12%, at maximum over 50%. Any one of them you see with a triangle, they can put warships at, like naval ships. But an interesting thing that a lot of people that haven't realized is that China has a mandate for all of their shipping containers that they are built with the same steel and the steel reinforcements and specs as all naval vessels. So they can be converted into, aircraft carriers and people transporters in seconds, not days, not years, not hours. So it's a very interesting thing. Okay. Very interesting thing that is occurring. I'm not forecasting anything beyond that, but the Silk and Belt Road Initiative is mainly to unite, to move freight and create commerce is the initial purpose of it. Whether there are more nefarious purposes, I will let you surmise and devise what your feelings are on that. Okay. I am not gonna go into that. Let's see. Russia wanted Cuban missile bases because, yep, that is very true. So let's see. Pushing us in the corner. Laurel, very interesting. Buffett wanted in with that on the U.S. taxpayer dollar. I mean, it makes sense for the U.S. to own part of that. So let's go through some stocks and some positions and things like that today. I'm going to open up a couple of instances here because we're going to check a few different things. But what I want you to do is go ahead and give me some ticker symbols and stuff that you guys want to look at. Go ahead and give me some ticker symbols and things that you guys want to look at. GILD, Ionic, SPX, MTSR, PLTR, GC, NQ, NVDA, VLO. Wow, I wrote that all sorts of backwards. I wrote OLV, so I don't even know how I got that one. CRWV. We will check in on AMZU. Euro currency future. Is that ECF? MPC 6E. That's 6E. Okay, MPC 6E PSQ HUYA. And I think that should, if we got more time, I will come back to a few of those as well. So we're going to start with just a few. I'm going to look at the NQ first and foremost and the ES, to give us kind of a basis. And then we'll look at the S&P as well. So if we look at the NQ, and first things first, I'm going to hide that. And I'm going to slide this down. So looking at market energy, we have buying volume still somewhat in control, but it's kind of losing its momentum. As you can see, it's angled down. And interestingly enough, on a long-term basis, in looking at Tyson's indicator here that basically creates an oscillator based off candlestick movement and price action, it is showing us that we may want to think selling opportunity here as we're entering in that sell zone. Now, if you are trading short term in the immediate, I'm also going to look at some of my indicators here on this. And let's go in Q. And actually, got the wrong one loaded. In Q. So I'm looking at the NQ. Yes, overbought heavily. Overbought. We have not gotten the cross yet to sell, but short term wise, we have sell, sell, sell. On the 1 hour, we're just now entering in selling territory. The RSI is telling us to sell on the 15-minute and the 1 hour. On the 15-minute and 1 hour, the volume side, though, is showing a little bit of a buy and probably a peak back up into this area. So more than likely, I'm going to look at my daily here as well. If I look at the daily, I could see that this is starting to push down. We still have some buying volume in there despite the pullback that we're seeing this evening. So what I anticipate, if you're trading for the short term and you want like potential for trade, look for something. If you get like a counter trend line break, so a trend that would be drawn across the tops of these, look for a break here and a push on up there. Right. So a break of that to push up to somewhere at 23, 740, 750. if we don't get that, right, because we are at a level of support and resistance, if we break through this level of support, then I'm looking at 23,680 as my low here. So if we get the break, I would do nothing right now. I would do nothing right now. We either are going to bounce off of this support and rally and break this and push up to 23,747.25, or we are going to push through this and we're going to fall down even lower to 23,680. Does that make sense? Yes or no? Is everybody with me on that? Yes or no? Now, if that's the immediate, if you're looking long term, let's look a little long term here. If I'm looking long term at this, we are still pushing higher in the NQ. The NQ though, we only have one more company to report out of the earnings. I think that's Nvidia. Let me just look up their ticker symbol. Duh. NVDA. I think they report. Let's see. Yeah, they report on August 27th. So they're the last of the Mag 7 to report. So as long as Nvidia is still riding high and pushing up, we should be good to go on Nvidia. The one area that does give some concern is if we were to, if I were to add on, let me add that's so weird that it's on one but not on the other. Huh. If I add on this indicator here, this fib, it does give me, I think that we should get another pullback at least into this blue area. So 23,320 on the daily is we need a little bit of market relief, right? The market doesn't go straight up forever. So could I see us falling back down into this area? Absolutely. Without a doubt, could see us coming back into at least that level of support and resistance. And then if we apply our regular Manuel Fibonacci's, A to B, B to C, C to D, A to B, B to C, C to D, no fib there. And well, we still have a little bit to go, 24,035 before we get up there, right? And if we go to the NASDAQ, so the QQ, I don't know. If we look at just the NASDAQ index, we're at 23,611. So as long as, we're still bullish and running up like that, there's nothing really to be too shocked by. What does concern me is the amount of time that this is needed to pull back. So I'm anticipating some sort of pullback this week. Whether it's high inflation numbers that push it down, whether it's an announcement, a reaction, something like that, that's what I'd be looking for. But I would not just sell to sell, right? I would wait for a trend line break, a counter trend line break. So if you draw your trend lines along the bottom of that, if we break one of these trend lines, look for it to fall back down to a level of support and resistance. That's what I'd be looking for, okay? So if we go now to, let's go to the ES. And looking at the ES, very similarly, we know we need some relief. We know the market is overbought. We know we want counter trend line to break. Let's look at the ES over here on the shorter term as well. And we will send this back to a 15-minute and put it back in its spot there. And take a look. On the short term, again, very similar. If it breaks this level of resistance without pushing up higher, then look to sell it to the next level of resistance or even down to 6,404. If it does not and it breaks a counter trend line, then look to come back up to 6,422. Okay, now let's get into let's check on a few others. AMZU. So AMZU, if we look, we'll throw this on the daily. If you had, let's see, that was Thursday, Friday. So our last Sunday session was what day? The second. So Monday would have been, no, it would have been the third. So Monday would have been the fourth. So I had said to potentially look to buy this, at on Monday. Monday, I look like I know y'all were cursing me out, but Friday, you were probably happy with me. Did anybody take that trade? Yes or no? Anybody take that trade? Yes or no? Not yet. No. Yes, 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 no, yes, no. Yes, yes, yes. No. Okay, great. Good. For those of you that did, great. Look to be very careful. I'm still looking to fill this gap. I will say short-term wise, it's still showing bullish, on the 5 minute as well. But just know that we'll probably get a little more whipsaw before we fully make our run all the way back to here. Now, if you are just trading Amazon itself, AMZN, right? Then know that, hey, we are still running bullish in Amazon from 211 up to 222. That's $11 move. That's $1,100 in an option play. If you were trading that, we're looking for it to peak out at 231. People aren't going to not stop shopping at Amazon. So that's a phenomenal play as well. Still looking for that long-term bullish gain on Amazon for sure. Now, next trade that we'll get into, let's look at Palantir. And I will put it on here as well, PLTR. Palantir, this has been severely rallying 186.96. I do think that conditions are starting to see we are overbought. So it's time to be thinking pullback here on this fib, and we should pull back to fill this gap to 180, 162.36 is what we're looking at on the long term. Short term wise, do we have any reason to see pullback? Well, buying volume is dwindling on both the 5 minute and the 15 minute. And then on the 1 hour, oops, this should be 15 minute. I don't know why it doesn't pick up that first click of the mouse, but on the 1 hour, still riding high, still solid. However, what I am seeing is market structure. Okay. So this is what market structure is showing you. We have a rising, what's called a descending wedge or a rising wedge, whatever you want to look at that. However, what it is that the trend is showing up, but the highs are staying flat. That shows that the market is topping out and we're about to turn over. Okay, so if you're in something like Palantir, perhaps put a protective a stop on it and lock in some of your profit. Maybe put it just below, I don't know, you put it at 186, it's a dollar 80 you're losing. So that's $180 loss and 100 shares. But if you if it falls down here into 179, it's better than losing a couple $1,000 on 100 shares. So I am looking at that saying, hey, market structure is indicating to me that Palantir, it's probably going to slow down a little bit. Now, Palantir, PPTA is what that makes me think of, which is our other Peter Thiel company. We had talked about potentially getting access to this. So from the 4th, where were we? Oh, you know what? Let's just go here. PPTA. So when we looked at this on the 4th, right? Huge buying opportunity, shot all the way up from 15 to 17, pulled back to 1690. I am looking at this saying, hey, this is going to be its next wave down. We're probably going to push down a little bit. probably down into the $15-$16 range. This will be your next entry point. If you don't have it, great. This is a great opportunity to buy it. This is a mining company that Peter Thiel is a part owner of. And just so happens everything he invests in does really well. Who'da thunk it? Which another random thing, Starbucks. Do you know who helped Howard Schultz get purchase Starbucks? If you had to guess, just random guess, who do you think helped Howard Schultz buy Starbucks? Not Thiel, but the Gateses. Howard actually went to Bill Gates Sr., Bill Gates, the one that everybody thinks of when they hear that name, his father, told him everything what was going on, was being outbid by one of his investors. Bill Gates Sr. walked over to the guy's office and kind of said, look, you're going to back down on this. You're going to pull this. Otherwise, you're not going to like what you see from me. The guy backed out, and Bill Gates Sr. told him that me and my son are going to help you buy Starbucks. I had no clue. None. Learn that story today. So there's something for you. Learning something new every single day. Let's take a look at a few more of these. Let's go 6E. Euro futures. This is still a clear-cut buy for me. Buying opportunity all day, back up to 118,275. Easy buying opportunity there on the daily time frame. Let me look here on the shorter time frames. Yeah, I love this as a buying opportunity. So anybody that's Todd, so for yourself looking at the euro, I think this is a good buying opportunity on the euro. Let's go to Ionic. IONQ. Ionic, still a buying opportunity. I think this will buy back into the 44.94 mark. And then we may see the market turn over a little bit as well. So just for my individual that asked for that, I'm looking at that. GILD, Gilead Sciences. It's had a great day on Friday because of earnings. What was their beat? Nice beat on the earnings side. I think this is gonna continue to push up. I don't see any reason for a major slowdown here. I still think we have room to rise. So unless we start to see selling volume enter in the equation, come Monday morning, then you're pretty good with GILD. VLO. Hmm. Got a lot of sell side bias here on VLO. Hmm. So theoretically, there would be some buying opportunity in VLO. However, I don't think this push down is done. I think we see VLO get back into this 125 area, right? I think if here's what I'm going to be looking for, okay? So anybody looking at Valero, this is what I would do on this if I were looking to enter. I would wait and I would see if we break below this and we close below this line here at 133.29. That tells me that that we will probably come somewhere into the 124 mark. And at that point, that's where I would be looking for the buy. All right. So if you're a buyer of it, hold your horses for a second, in my opinion. And if you're, selling it, make sure you're constantly moving your stop up so you can lock in that profit. Let's see. MPC. MPC, again, much the same. Oil companies right now, price of oil is continuously falling. It's not holding. We have a lot of opportunity for, energy costs to come down. And as long as energy costs come down, they're not going to make as much money. So that just is what it is. Okay. And let's look at PSQ, which is your pro shares short of the NQ. This I'm thinking we may want to think about getting staying away from that one. Because I don't know if we're going to see the shorts come in this hard, right? I do see there is some snapback opportunity here, both the short term and long term on PSQ. HUYA. Oh, you meant Phillips Company. Okay, gotcha. We'll look at Phillips. Not a problem at all. HUYA. What is that? Hua. I've never heard of the company. Um, this is still showing short opportunity in this, down to like $2.64. Let's look at PAX. Do you want Phillips or PSX is what you're looking for, right? Okay, there you go. Okay. I'm just making sure that I'm showing the right thing. So Tyson's software is showing, hey, maybe think of a buy. Mark is showing sell. I'm leaning more towards sell, mainly just to the price of oil. If we break this level of resistance, okay, we are strong resistance on it seems like every oil company, gas company, whatever you want to call it, we are at like a serious level of support and resistance. If we break through this and close below it, look for it to fall to 109. And that's another $10 fall. And then I would be buying. Does that make sense? So I don't care what oil company it is. If we break below its nearest level of support and resistance, then I am looking to that next level before I want to buy it. Is everybody with me on that? Give me a yes. Perfect. And let's see, what other company here did we miss? NVDA. NVDA. Again, Tyson System showing selling opportunity. I still see a little more buying opportunity in this before it sells off. Once we get a red dot from HFT, then I would be looking to sell. Let me look on short term. Short term, we do have a red dot short term. Maybe it is. Maybe the set look for selling volume. Hmm, don't like it though. This hmm. Maybe a small pullback, but I don't see a large pullback happening this week in Nvidia. Around August, closer to August, trade deals get worked out differently. Sure. Then there's a selling opportunity. Right now, not at this moment. CRWV, CRWV. Short term, I see that same kind of rising wedge scenario happening where we're going to see probably a fall here in this coming soon. I'm already seeing volume showing selling opportunities. My goodness. Brand new mouth, CRWV. And again, buying opportunity here, looking for, it already hit its pullback for CoreWeave. So I don't know. I'm looking at this and saying, hey, yes, I still see a sell opportunity back at least to this like area of, we're not talking huge, maybe $10 or so before the next rally up. Okay, does that make sense? Are you with me there? What in the world? I don't know why Market Energy was looking so weird. Of course, absolutely. All right, guys. Well, look, that's going to end it for tonight here. What I do want to do is that next week, I want to go ahead and send you guys next week's link. We're trying to rebuild, all of the how it was automatic. However, because we tested one thing, so let me send you next week's link to this session. What I'd love for you to do is here is the link for next week. Go ahead and register now. If you register now for next week, then you will automatically get the joining emails and all of that. Okay. You'll automatically get the joining emails and so you can be in this session every week if you found value in it today. I hope so. Um, and join the Discord as well as I will send you also a couple other links as well. So you guys can get registered for those as well. Here is those two links. Love it. Thank you. Keep my head on straight. So, and look, guys, I'm going to be in webinars this week. I'm going to be filling in, showing a couple of different tools. I'll send those out via the Discord if you guys want to join them. And if you have any questions at all, please feel free to reach out now. And then lastly, guys, if you ever want to talk about what you're doing investment wise, is it right? Is it going to help you? Is it going to help you achieve what you want to achieve? Here is the last link I will send you, or just grab your cell phone right now, scan this thing that you're seeing on your screen, and I'll make it large for you. That link is directly to my calendar. If you want to talk about retirement, asset management, trading, anything, this is a great way to book time with me and my team. So, this is all about retirement and investment management. So use that link, book time with me. Look forward to it. And I will see you guys in a webinar very, very soon. I gotta run. I'm 7 minutes late for the meeting this week. So let's see. Vicky, absolutely. Did you get the video I sent you, Vicky, by the way? Just want to make sure you did get it. I sent it last night. It was kind of late, I think, or maybe it was the night before. And Rick, book time with me if it's about okay, gotcha. Perfect. Book time with me if you need to, Rick. If it's about um I will help you in what I can. Here is my link again, and that's the best way to do it. So, all right, guys, have a good one. Thank you all, and I look forward to seeing you guys next Sunday, if not sooner. Have a good one.